How to sell covered calls on Fidelity. Okay, so in this video, we're going to talk about what a covered call is and how to sell them on Fidelity and some of the reasons that I do so. So I sell covered calls on Fidelity, usually on a weekly or bi-weekly, even monthly basis, okay? And I simply do this as a way to basically earn myself, I would say like a dividend or some sort of yield on my growth stocks, okay? So we know like growth stocks like Tesla, Amazon, okay, some of the bigger ones, Google, of course, Nvidia, Lucid, whichever growth stock you own, you know that most of these companies do not pay a dividend. And the reason they don't pay a dividend is simply because instead of paying out a dividend like a stock like Walmart or Procter & Gamble, they're taking that income and that revenue and they're reinvesting it back into the business. So obviously there's a lot of people that say, hey, dividend stocks are superior to growth stocks. And that may be true in the past. But, if you take a look at some growth stocks, I'm going to keep talking about companies like Tesla have greatly outperformed most of dividend stocks over the past, 5 to 10 years, simply because we're in a tech era and there's a lot of industries that are going to be disrupted throughout this decade. So it really is advantageous, I think, to have a good percentage of your portfolio in growth stocks. Not all, but you definitely want to have some exposure, because if you invest in dividend stocks, you're probably only going to get like between 5 to 15% returns on average, just because with so much of the net income being paid out as a dividend, it doesn't allow the company to grow as fast. So selling a covered call is a position created by buying stock and selling call options on a share for share basis. So it says selling covered calls is a strategy in which an investor writes a call option contract while at the same time owning an equivalent number of shares of the underlying stock. So this is a strategy that I do on Fidelity, and we're going to show you guys a tutorial, show you exactly how to do this. It's really simply to do, okay? First thing you need to do is you need to go to make sure you have a Fidelity account, okay? So you need to go over at fidelity.com, open an account, okay? Assuming, I actually made a video earlier, I'm going to link to that in the description below, showing you guys how to open a Fidelity account. Very easy to do. So I'm going to assume you already have that set up. So now we're going to head over to what is called the options chain, okay? So to get this on Fidelity, all you have to simply do is you just head over here, you go over to the Fidelity website, you can simply find this, you can either go to quotes, okay, you can hit up quotes, or you can click options. Options will bring this up, I think, faster, but you can also find it under quotes. It's just an extra step. So just head over to news and research, go to options, and then you'll have this. So this is the options chain. So for this example, we're looking at AMC, okay. Now I own 100 shares of AMC. If you guys have been following my channel, depending on when you're going to watch this, AMC is one of the more popular meme stocks. So I kind of want to use AMC as an example because I think a lot of people are going to be own AMC stock. A lot of retail traders own it, and I think it's a fantastic example of how you can generate income on your position, simply by holding the stock. Okay. So a stock like AMC, a lot of retail traders are holding it, like you and me, and but it doesn't pay a dividend. So a lot of people are thinking like, well, okay, is it going to soar? Is it going to short squeeze or something like that? Well, that may be true, but there is a way that you can earn a little bit of yield on your shares without doing anything else. And this is simply by selling a covered call. So we take a look here at the options chain. We can see that right now AMC stock is currently trading at $12.45. And as you can see here, there's many different expiration dates, okay? So you see here, this is the calls, these are the puts. So we're going to be focusing on the calls for this video, but I'm going to make a video on puts as well in the future, because that's definitely a strategy that I want to get into. There's a way that you can actually acquire shares for cheaper by selling puts and then buying the share cheaper, but that's for a different video. So as you can see here, we have different strike prices, okay? So me personally, it really depends on how much income I need, okay? If you have the time, you can probably maximize your profit by selling weekly options, right? And that's just simply, you're getting more reps in, okay? If you're selling an option every week and then someone's selling an option once a month, more likely you're going to generate more income by selling weekly options than you would do with monthly. So for example, if we take a look here at some of the strike prices. So let's open this up a bit because it only shows a few of the strikes. So we're going to click apply. So what you want to do is, if you want to see all the strikes, you just simply go to here to strikes and then you click all and then you hit apply. So we're going to do that real quick. So hit apply. Okay, so now it shows all the strike prices, okay? So as you can see here, the chain goes down very far, right? So at AMC stock's currently around 12 bucks. It goes all the way down here to $32. So that means people are buying call options thinking that AMC stock will finish over as high as $32 within just a week. So if you just wanted to be conservative, okay, now some of these stocks, they can really move really fast. So remember, if you sell a covered call, and this is a mistake that I've made in the past, if you sell a covered call at a too low of a strike, right? So let's say I sell a covered call, I want to make this $50. I sell the covered call at like $13.50. AMC stock finishes next week at like $15 or $16. I'm forced to sell my shares below market value, which means I lose out on upside potential. So what you probably should do, and this is what I'm doing, okay, obviously, you need to do what's best for you and what's best for your financial future and your account. But what I used to do is I used to kind of try to get as much premium as possible. And sometimes that burns me because sometimes I'll sell the call option too close to the strike and then the stock runs and then now I've just sold my shares under market value. So what I'm starting to do now is I'm basically starting to just choose a strike price where I'm comfortable at selling the shares. So I bought AMC stock at around $12 or so. So I would be pretty comfortable selling my shares for at least $18. That way I get at least a 50% gain. So I could do this every week, right? Or, so let's say if I sell it at $18 strike price, I would get $14 in income, right? But I could also compare this with I would sell the same call option 26 days out, where I would get $58 in income. So as you can see here, it's pretty similar, okay? You've got, you can compare receiving $14 now, that was the last price, and then $58. But there's a couple of reasons why it's a little bit better to sell shorter term options, really from like a week to 3 weeks. And that's because we don't know what's going to happen over the next month. So if we sell a call option here, chances are AMC probably won't finish above $18. And one of the ways we can take a look at that is simply look at the open interest. So as you can see here, the open interest is much higher on these call options that are closer to in the money. So we have 4,000 at 14, almost 5,000 at 15, but only 2,400 at $18 strike price. So we know that a lot of people, this is a less popular option. Now we do have a lot of people betting on the $20 strike price, and this is where you have a lot of gamblers. Okay, the AMC stock would have to go up over 50% within a week, which unless there's a massive short squeeze, it's just unlikely to see a stock return 50% unless there's some huge news update or something like that. So me personally, I've been doing really well selling weekly options. Now, if you guys are short on time, maybe you have a full-time job, a family, you're busy with school, you don't have time to log into your account every week and sell weekly options, monthly options is a great alternative. The problem is that if you were to sell weekly option on AMC, a monthly option on AMC, this would expire in 26 days. That's a long time, okay? There are a lot of things that could take AMC stock up 50% in less than a month, assuming there was a short squeeze, assuming there was a news update, assuming that the company just got more popular and things like that. But it's a lot easier to manage. So I think those are the most two popular options, either selling a weekly call option or selling a monthly call option. So I'm going to show you guys exactly if you wanted to start with weekly, because I think it's a little bit safer and it gives you a little bit more wiggle room because the stock is less likely. So let's say I was to sell this option right here. I would just click sell option. Okay, so as you can see here, I'm holding these AMC's shares in my IRA account, okay? So these shares, I have 100 underlying shares in this account. Okay, so as you can see here, I'm holding these AMC shares in my retirement account. As you can see here, you want to make sure you see this message before you're able to actually sell a covered call. If you have the shares in your account, remember you need at least 100 shares of a stock. So 100 shares equals one call option. So one call option is equivalent for 100 underlying shares. And whenever you go to the chain, you make sure that you have the right symbol in there. You should see a message that says something like, there are 100 shares of AMC owned in cash in this account. This will allow you to sell a covered call. So you want to make sure you see that message. If you don't see that message, try hitting the refresh button. Sometimes I use the desktop for Fidelity, and it doesn't show it. It actually just went away. So let's refresh it again. So wait, let me get the message back up. Okay, so now it's showing again. Sometimes I click it and it gets a little buggy, but I know if you don't see it, just try refreshing it. It should pop up this message here. That's really important. So you will not be able to sell a cover call if you don't have this. So what you want to do is you want to make sure you're under sell call, and then you want to hit action. You want to be at sell to open. Okay. So I have 100 shares, so this will allow me to sell one options contract. Okay. So then I hit 1 there. Now I want to make sure I'm choosing expiration. Remember I said that I usually do weeklies because I've been burned by selling long-term call options too close to in the money, and then the stock ran, and then I just ended up selling my shares too cheap. But you can try, obviously you could try bi-weekly if you want. I mean, just figure out your risk-reward strategy. For me, after I got burned on that charge point call option selling it, more likely I'm just going to be doing weekly options. I have time, I have my own business and things like that. I have free time to basically log into my account on a weekly basis. But if you guys don't have as much free time, try something a little bit further out. Maybe try selling the option about a month in advance or something like that. I mean, you're going to get similar results if the stock doesn't really run on you. So as you can see here, if you do the July 8th expiration, that's about a month from now, you'll get about the midpoint. The last traded option was $91, okay? So to quickly explain how this works, the bid is what someone wants to pay for it, and then the ask is what the seller wants for the option. Okay, the volume is how many options have been sold in a current trading day. Open interest is how many of these contracts are actually open. Okay, so what you'll see here on Fidelity is you'll see three things called the bid. That's the lowest amount of money that someone's willing to pay, and then the ask. And what Fidelity will do is they'll give you a midpoint. A lot of times I just hit the midpoint. Now the trade won't necessarily execute right away, but because options market moves so fast, chances are you're going to get your trade executed at the midpoint, because remember, the bid and the ask is changing so fast depending on the underlying shares. So when AMC stock goes down, that bid and that ask is going to fall, and that midpoint is going to fall. But when the shares rise, the options are going to go up, because there's a correlation based on the options that I'm going to talk a little bit more in this called the delta. Okay, so the delta is something that correlates very heavily with these options. Okay, so let's talk a little bit about actually placing the order, and then I want to talk a little bit more about the delta, and then we'll kind of wrap things up here. So what you want to do is there are different type of orders. Okay, you've got a limit, a market, a stop loss, a stop limit, a trailing stop. So I'll usually use the limit trade, because when selling options, it's really not like buying the stock. I just want to make sure I get my trade in. But if you really want to get your trade in, if like the market's about to close, or you don't care about the actual price that you're receiving as a premium, you just want to get the trade done, hit market trade. So market trade will execute this option at whatever the current market price is. So according to this, it's 91 cents, but when the market opens, that will be changing from 9:30 to 4 a.m. So it's really important to remember that options are only traded from 9:30 a.m. Eastern Standard Time to 4 o'clock p.m. Eastern Standard Time. So there's no after hours trading on options. So you can't sell options in pre-market. You can't sell a covered call in after hours, only during market hours trading. So if I were to do this as a market trade, it would just enter the trade in, and then when the market opens at 9:30, it would execute it, and I would receive my premium. Okay. So now what would happen is that I would hope that this option would expire worthless. So for that to happen, AMC stock would have to basically trade below $18 by July 8th. But I'm a little bit more conservative. Okay, I've been burned in the past by selling long-term out of the money contracts. So let's say I wanted to do a contract that's expiring on June 10th. Okay, so I'm a little bit conservative, so I want to sell an options contract that's expiring on June 10th. I'm pretty confident AMC will not soar over 50% in just a week. and then I would receive a premium of around $13. If I wanted to do a limit trade, it would probably be around $14 or something like that. Now, Fidelity does charge 65 cents per contract. So if you guys do 10 contract trades, you're going to be spending about $6.50. Now, this can add up if you're selling a lot of covered calls. You guys have a lot of money in an individual stock. That will add up. If you're looking to trade options and sell covered calls without fees, I do recommend Robinhood or Webull. They do have free options trading on their platforms. But for me personally, I don't mind using Fidelity. I've been using Fidelity, oh my goodness, it's been 16 years now. So, you know, I'm comfortable with it. I usually sell covered calls in my Fidelity account, and then I use my Robinhood and my Webull account, swing trading and options trading. Okay, so after you see this, and make sure that you see the message here, you have sell to open one contract, you hit preview order, it should allow you to execute your order. Okay, so make sure you see that message there. If you guys are trading when the market is not, the options market is not open between 9:30 a.m. Eastern Standard Time, 4 p.m. Eastern Standard Time, you can't use a market trade. So make sure you use a limit trade. If the market is open, you'll be able to set up a market trade. And then some of these stop loss and stop limit, these are just simply trades that will execute if once you want to buy the option to close it. Okay, so sometimes it is advantageous to buy an option to close it, simply because maybe the stock price is just running in a direction and it's running against you, or the stock price falls and you can buy the option back cheaper. So let's say I were to sell this options contract at a strike of $18, okay? And AMC stock were to fall to like 11 bucks. Well, we take a look at something that's really important. It's called the delta. So if we take a look here back on the options chain, okay, we take a look at this strike price here of $18. We have this this thing here, right here, it's called the delta. So the delta of this particular options contract is 10 cents. So what basically this says is that every dollar AMC stock moves, this options contract will move up around 10 cents. So if AMC stock moves to $13.45, this contract will probably be worth around 24 cents or $24 per 100 shares. If AMC stock were to fall to $11.45, this contract would be worth 4 cents. So sometimes it really depends. If the stock is really volatile, let's say AMC stock falls, you can actually buy this option back cheaper to close your position. So you would just simply go to the same page and hit buy to close, and then you are able to buy this contract back cheaper, because if the stock is moving, it could crash, but then it could reverse and then it could soar. So you want to make sure that you're not selling your strike price is not so low that it's moving past the stock. If sometimes you take a look at this options chain, the delta is like small or something like that, the implied volatility is pretty high. If you see the AMC stock go like crash down to $11 and this contract is just trading at like 4 cents, 3 cents, might be smart to just close the contract out, right? You're going to be up like 75-80% anyway. So just close the contract out, because maybe AMC stock hits 11, bounces off $11 support, soars to $17, $18. Now, if this contract finishes in the money and the AMC stock is over $18, you're forced to sell your shares under market value. So that's just definitely something to think about. And you can simply close out a position by just hitting buy to close. And it's basically the same process. And then you'll hit preview order, and then you'll receive be spending money. So they'll be debiting your account to buy to close the position. When you sell to open, you'll be crediting your account. So that's about it, guys. This is a pretty basic tutorial here on how this works. Once you sell to open your option, you will receive the cash instantly in your trading account, okay, during market hours. But the one thing is that the money will not be available to withdraw. So as you can see here, you'll see something on your Fidelity account. It'll say like cash available to trade, buying power. Immediately after you sell that cover call, you'll be able to take that cash and do other things with it. You could buy other stocks, or you could reinvest in the underlying stock. And at the end of the trading day, maybe like for Fidelity, it's usually like, I would say about like 12 hours after the market closes, that contract will settle, and then you'll be able to withdraw that money. So sometimes what I have done is I've actually sold covered calls, taken the waited, until the next business day, and then taken that cash and used it to pay some of my bills or things like that if I'm in like a cash flow bond or something like that. So you don't have to take the premium you receive and reinvest in the market. You can use it. Sometimes I buy Bitcoin. So sometimes I'll sell an options contract, take the premium and buy Bitcoin. So it's really up to exactly what you want to do. There's many different things that you can do with options trading, guys. So I hope, guys, this video was very helpful for you. Hope I explained a lot of things when it comes to trading options and stuff like that, especially selling covered calls. If you guys enjoyed this video, please give me a thumbs up. I'm going to make more tutorial videos, especially on Fidelity and Robinhood. These are the two platforms that I use the most. So if you guys enjoy this type of content, let me smash the subscribe button, give me a thumbs up, let me know in the comments. And if you want to know exactly which stocks I'm trading, as well, take a look at my entire portfolio across my growth portfolio and my retirement account, be sure to hit the link in the description below and check out my Patreon account. You can subscribe there monthly, and I also update my Patreon every week with my latest buys and sells, not just with the stock market, but cryptocurrency as well. I am a Bitcoiner, so I definitely going to be posting some of my trades, some good entry points on cryptocurrency. I'm very bullish on cryptocurrencies as well, and I think Bitcoin is one of the safest plays out there. I usually don't recommend any of these other altcoins. So be sure to check out my Patreon if you guys enjoy that. That's it until next time, guys. That's all I got. Take care.